Welcome to Empire Building. I'm Wendy Papazan, and together with my 4 co-hosts, we bring you weekly unfiltered conversations about leadership, growing a big empire, and living on your own terms.
I'm Kimber Lovett-Minkiti. We are investors and wealth builders with over $75 million in combined net worth.
I'm Sarah Reynolds. We are visionaries who built more than 50 businesses with over $122 million in annual revenue.
I'm Tiffany Fikes. We've led thousands of people and do it all while being pretty good moms.
And I'm Seychelle Van Poole. We are your podcast to learn how to build big businesses and even bigger lives.
Hello, and welcome to Empire Building, the podcast where we talk about building a big business and even bigger life. I'm Kimber Lovett-Minkiti, and I'm joined with my incredible co-host, Seychelle Van Poole. Hey, Seychelle.
Hello. We have such a hot topic for you today.
Oh, yeah. This is one of my favorites.
It's like a really, really sexy topic. It's one of my all-time favorites that you and I get to talk about. So I'm so excited we get to do it together.
That's right. Because who doesn't love cash flow, right? How to be financially free and have all the cash you need to live your best life.
Yes. Yes.
Who doesn't want that?
That is so awesome. And cash that more than exceeds anything you need to live your life. That is so fun.
Yes. And having a path to that now. Because I think sometimes we think about this as something like you need when you're ready to retire. And the reality is no, we're going to unpack why having this today, right, in your life, understanding it really unlocks a powerful freedom formula that really changes all your options.
I love this. Well, and, part of the reason why we want each of you to be financially free is we want you to be able to choose to show up and do the work that you do every day. We want you to choose the impact that you get to make in your communities and in your businesses. And when you're worried just about keeping your head above water and paying your bills, that's a very different vibration that you show up to work with than when you are joyously waking up going, I'm good, I'm covered, let's make sure everybody else is taken care of. It's a totally different experience from a leadership standpoint, which is why selfishly, we need all of you listening to be financially free. It's actually selfish for you not to be financially free because you don't get to impact as many people as you want to when you are worried about paying your bills.
That's right. Absolutely. And I think as an empire builder, a lot of times we hear our builders have these incredible businesses and they feel trapped by them.
Yes.
They don't feel free, right? You think entrepreneurship, which is the definition of freedom, right? That you are building a business. And yet, if you're feeling trapped by your business, then this is a way out, right? This becomes a way to get back into love with the work you're doing and the business you have and the life that you're building. And we want our empire builders to do that today, right? Not have to feel like they're waiting for this life.
Kimber, have you ever felt that way? Because
yes.
When you said that, I was like, ooh.
Oh, yeah.
I have felt trapped by business before. Oh, yes. And I didn't have a choice.
Yeah. The weight, too, of it.
Yes.
Because I think it's cash flow. Look at this from 2 lenses, right? Cash flow in your personal life in freedom and cash flow in the business world. So thinking about it in both sides, because those are the things that really are the weight that our empire builders carry, because it's man, it's heavy. And I have absolutely felt that weight. I feel it today, right? There's a weight and this gives you a formula to get to the other side.
Which is really fun. So let's talk about the first number that helps us assess the cash flow and how to be financially free and what you need. And that is a number that we lovingly call the freedom number. And sometimes we refer to it in a shorter name, which is your FU number. And that's because you get to decide what work you're doing. Because if you don't want to go to work, you're financially free. You don't have to, but you get to choose to, which is really cool.
That's right. And we have a whole episode on the FU number. So if you're wanting to dive into that, check that podcast episode out. But let's just quickly, we'll give you an overview. The freedom number is essentially the amount of money you need annually to be fully fund the life that you want, your living expenses and your big life, your dreams. So not just like, oh my God, my mortgage is paid, the bills are paid, the kids are in school. Like, no, it's also your vacations. It is your surprise and delights with people you love. It's the numbers, but you have to know the number, which, does sometimes require like understanding all of your income, all your expenses. What do you have? But that number, what do I need to like have every year coming in and then ultimately every month, right, coming in to cover the incredible big life expenses.
And your number's uniquely yours. It doesn't compare to anybody else's. It has no emotion with what your neighbor next door has. This is your number, and it gets to be whatever you want it to be. So just for simple math, let's use just a simple number. Let's use the number, let's say you need $200,000 a year to fund your perfect life. And you have to clear $200,000 coming back into your bank account in order to do that. So using the freedom number formula, you are going to use what we call the 4% rule, which means you are going to take $200,000 a year and you're going to multiply that by 4%. And what that looks like is basically if you take $200,000 and divide it by 4% is what you're actually going to do, you're going to get a number that is $5 million. The reason why we're using the 4% rule is because if you are retiring and you are going from a higher risk portfolio to a lower risk stock portfolio and you had your money invested in very conservative stocks, let's say you're moving from Vanguard funds and Spider and all these things to treasury bills, to municipal bonds, to maybe you've got more like silver and gold and like other things that you're moving into more like very conservative, like predictable spitting out cash, that is about a 4% return is what the conservative number is that you'd be coming back to. So what you're going to do is you're going to either take 200,000 and divide it by 4%, which is going to give you 5 million, or you can do this way. You can take 200,000 and multiply it by 25, and you're going to get that same number of 5 million. So if you had $5 million today invested in incredibly conservative things, spitting at least an average of 4% out for you at a time each year, that's $200,000 that is covering your freedom number that you need. So 5 million would be your freedom number. Does that check out, Kimber?
Yep. And that is literally like what every person, who's going to do a financial plan for you and help you say, when do you want to retire? You want to retire at 62? Then how much money do we need to have invested with your 401k and your stock? Like that's the traditional way we've thought about like freedom as it related to retirement, right? And that's one way, right? That's certainly the traditional path that many people have followed. They've and frankly, like we just January 1st, right? Our government set up a structure where we force people into the 401k. As an employer, you now have to put that money aside and the employee has to then go back and opt out versus the way it was prior to that. The employee had an opportunity to opt in, right? We're trying to help people force preparation for retirement. And that's exactly what this is doing. It's trying to prepare you so that when you look up at 62 or 65, whatever that number is for you, right? Or the number that it is
the government forces.
The government says that this is your time. This is when you've retired. Now you've got this amount of money in an investment that's going to fund your life. And what happens for a lot of people is they don't have enough, right? Like the amount that they are going to get back annually doesn't actually cover the lifestyle, right? We talk about think about a lot of seniors. It doesn't cover the lifestyle, but that's the sort of traditional path to freedom, right? You got the number, you got the thing, and now you're ready to sail off into the sunset with your retirement number.
And, I love that number. And I woke up a couple years ago and said, but what if I don't want to wait to retire to feel financially free? I'm building up our assets, but I don't want to have to liquidate those now to be financially free. They're still growing. I think about our rental portfolio. Those are not paid off yet. They still have mortgages on them with some of them, and they're paying themselves down. Eventually, they will get us to our freedom number. But I was like, I don't want to wait.
Yes.
I'm impatient. I don't want to wait to just arrive someday and then right off into the sunset. I want to be financially free now. So our circle started having these very productive conversations on the path to being financially free before you might hit that magic number. Maybe you have it in process and you know that you have a time frame in which you're going to hit that magic number, but you want to be financially free sooner. So let's talk about how we can do that and get financially free even faster today.
Yes, I'm excited about because it means like, guess what? You don't have to wait. You could actually start to do that now. It does start with the same process, right? Which is like understand your number. You do have to know your number. That's step one. You got to know what the number for you coming in every single month, right? Annually to live that big, beautiful life is going to get you there. So then we go into cash flow, right? We think about cash flow. It's a totally different way to think about it, right? This cash flow, passive income that can get you to that number. Cash flow is predictable, repeatable income that shows up whether you're actively working for it or not, right? And then it continues after that initial effort is complete. You're not chasing it. You're not having to work for it. You don't have to get up every day and make sure that you clocked in, you did the thing, you sold a house, you met at the kitchen table. Like none of those things are happening for this cash flow to do it. It's your income that outlives that initial effort. So it is the money that's going to come into you because you've done effort, you've made investments, you've done things that are going to allow this cash flow to flow in the door.
I love that. And so today we're going to talk about a series of different ways in which you can create cash flow. And I want to share with you all, we were on one of our Her Best Life Empire Circle retreats last spring, and we were in Bougie Vale, and it was very awesome. And we had 28 of us sitting around a table. And I led an exercise with our room that said, I want every single person right now to take 5 minutes, and I want you to pull up your bank accounts, and I want you to write down all of the different ways money flows to you, whether it is your business paying you, whether it is investments, whether it is in like passive income, whether it's in profit share, whether it's in loans you've made to people, like however money comes to you, I want you to write it down. I mean, we had influencer money coming in from all the social media platforms, right? Write it all down. And what we did was we went around the room and everybody read off their list. And if it had already been mentioned, we didn't repeat it. And we wrote it down. Do you want to know how many different ways that room of 28 people had money flowing to them?
Oh, I can't wait to hear the number.
This is so fun. 75 different revenue streams between everyone.
That's incredible.
75. So I just want to challenge you to think outside your mindset a little bit of there's one way to do it, because in a matter of a 1-hour exercise with 28 really cool, powerful business owners, we actually had 75 different ways money was flowing to people. That's really cool. Really cool. So we're going to go over some of those today. So let's go ahead and dive on in.
Yes. And I think what's powerful about that, Say, is what we're going to hit is some high level for you today, because we want you to be thinking about different ways. You want to have a diversified cash flow stream coming in, right? Different ways that cash flow is coming in, so that if one has a blip, has a hiccup, has a thing. And so as they said, we're going to give you a bunch, we're going to hit a bunch, and we want you to then go back and do that exercise. Exactly what Say's saying. What are the ways that you currently have cash flow, right? Where is it coming in from? And then think about this episode for hey, are there 2 or 3 ways that I could add very intentionally? Because Say and I've gotten really intentional, both of us, right, over the last year about understanding this and driving it. And it changes the game, right? When you're really tracking it, you know what it is, you know where it's coming from. And spoiler alert, one of the best ways to increase, not actually increase, but retain, keep your cash flow is actually have less money going out the door. So when one of the first things I did in the process, when I couldn't go magically make more money come in month 1, I could actually retain more money that was coming in because I had less going back out the door. So being aware of where everything went out. So when you're doing that exercise, do it from both sides, because it might just mean canceling a couple subscriptions you're not using, canceling some things, stopping the door, because if you're not using it, it's not actually bringing joy. That's actually the fastest way, right, to retain more of that cash that's already coming in.
That's so good. We call that the no-no list, because no, I'm not going to spend that anymore.
That's right.
So go make your no-no list.
That's right. Well, I actually had this, just life happens, right? So I had to get a new credit card, and so the Amex asked me, do you want to cancel the reoccurring subscriptions that were on the old one? And I was like, I do. Right? It was a couple things I needed. I'd had Peloton for 10 years, and I don't know, right? We had Disney Plus, all these things, right? And I was sort of I my kids, I got 3 teenagers, and the little one, uses YouTube now for everything. So I was I don't think anybody's watching YouTube. And the 17-year-old was hey, did our Disney Plus subscription get canceled? But 60 days later. And so sometimes it's hey, does anybody get a notice if we don't have this thing? Right? Do you even need the thing?
We figured out by doing that, we had 3 different Disney Plus accounts. I was Why?
I know.
Why are we
Okay,
paying for
Disney
this
Plus.
3
I know.
times? Like, I mean, good for Disney, but like, what? Yeah. So
Yeah, exactly.
you might even think you only have one, and turns out
There you go. Yep.
you have
See,
3.
that was a bonus.
And there's only 3 people in our house. So, I mean, we all don't need our own.
You do not all need your own.
No. I
Absolutely.
don't even know how to use a remote.
Yes.
Okay, so let's talk about now the money flowing to you effortlessly. It's one of my favorite affirmations. Money flows to you effortlessly. And so we're going to talk about some of those today. The first one is one that a lot of you listening happen to be involved in this industry. And it is amazing that we can do insider trading with this, which is real estate. If you are involved in the business of real estate, you should be buying it, you should be owning it, you should be doing something with it other than just selling it and being a transaction-based person. You should get some stake in the game. So a couple of different ways that Kimber and I have had a lot of success in real estate are these different ones. So I'm going to list them off for you. But you just to say it out loud, if you're not owning real estate, that is one of the easiest, fastest plays for you. So long-term rental properties is one, and that's like whether it's somebody living in a property or whether it is a commercial space that you own that has a long-term tenant, like keeping someone for a year or more. And we really try to negotiate our leases where our tenants stay a long time. We just had one of ours sign their 20th year with us. The property's tripled in value and they've almost paid the whole thing off. Like, that is amazing. And so that's one option right there. Another one is you can take a property that is a long-term rental and turn it into a mid-term or short-term rental. Your cash flow will go up. You do have to furnish it usually when you do that, but you can increase your cash flow of maybe a non-performing asset that you're wondering, do I want to keep this or not? By consulting with somebody that specializes in short or mid-term renting property management and see maybe if that might turn an asset into more cash flow immediately for you. And I actually have a couple of our clients that just did this, and they took their cash flow from $600 or $700 a month to $1,500 a month. Well, that makes it, if it's a single family rental in Dallas, Fort Worth, that makes it a lot more fun for them. And they're enjoying that a lot more. So that is an option for you. Kimber, I know one you guys are very heavily invested in is commercial.
Absolutely. Yep. Especially if you're going to be a tenant, like, right? So if you have a business and your business is paying rent to somebody else, that's an opportunity to look at, hey, should I look at buying a commercial building that I could be a tenant of? And the real, like, what I love is when we're only half of the tenant. And so the business is paying, right, us as it's two separate businesses, right? The commercial is its own entity, like, right? The other business is paying it. And then you got another commercial tenant paying it, right? So you can have multiple commercial tenants in space, but really keeping your eyes open into commercial, especially if you've got a business. Any places where you're paying rent, you'd be looking at, hey, what would it look like if that rent out the door was actually going and created some positive potential cash flow. So commercials has been a big one for us.
Another option too, and this one is getting a little bit more saturated over the last 5 years, but storage units and RV parks. Oftentimes you have somebody that either lives on site or gets paid to manage those, which is really nice. So you have a built-in manager and then you're, utilizing that. I know the move-in specials around Dallas are crazy. It's like you get 30 days free and then all of a sudden it's like $800 or $1,200 a unit. And I'm like, does this come with air conditioning and windows and like a TV? Like what is in here? So
it's wild. Yes.
At one point when my parents' house flooded, we had 4 different storage units and I was auditing the bills on it. Because literally the whole house flooded. And so we were working our way through the storage units, but each of those units was between $800 to $1,500 per unit. I'm like, this is more than a mortgage.
Yes.
This is more than a mortgage we were paying just to hold stuff. So it got us very motivated to get it out. But I can tell you, having had to move my stuff out of it for my parents and all of our childhood memories, like it takes a while for people to do that. And you pay a lot of rent on those storage units. They are doing okay. Those storage units are doing okay.
That's right. Pretty good investment.
Yeah. And then, the other one is like land, land for development, land leases. That can include mineral rights on them. That can include just ground rights. That can include farmland that you think will be future development, but the farmer is a tenant farmer on it until you're ready to develop it. It's a little bit more of a sophisticated play, but if you're in a more rural area and you're in the path of development, it's definitely something to consider and look at. I know one of our hosts even owns a tree farm they do harvesting on the tree farm every 10 years. So there's definitely different ways in which you can take land and make money on that too.
Absolutely. And I think the key here, sometimes we look at, especially if you're in the real estate space, the sexy thing everybody loves is like, I'm going to buy a property, I'm going to flip it out, I'm going to get all this cash. And while that might be nice, right, that has different implications for you from a tax standpoint, but there's the buy and hold game, sometimes a lot less sexy. But the cash flow game that it generates is incredibly powerful. So looking at your real estate, are you building a real estate portfolio? That's what you're doing here, right? And that portfolio is going to throw off cash. And it's just a strategy, right? Sometimes when you think about, we have a whole episode on sort of like cash versus the equity game, because sometimes you are like, yeah, I'm not as worried about the cash today, so I'm going to leverage it up. And maybe there's less cash flow, right? Because I don't have as much cash. But if you've got some cash, you can look at ways to do this, ways to refinance, ways to bundle a refinance. Like once you actually have a couple real estate assets, there's banks like your local banks, like a lot of times that will put 3, 4, 5 of your properties together, finance all of that together in a refinance, and that also can create some cash. So there's just ways to think about how to build your real estate portfolio with an eye towards positive cash flow.
I love that. Well, and that also kind of goes into our next option, which is you could be the bank. You could actually use your cash to make money on your cash. And so, something that all of us have participated in, I know we've got one out right now, is hard money lending. Oftentimes, you're earning origination fees on that. You're earning points on that, in addition to the higher percentage that hard money loans typically pay versus a traditional credit union or bank. The key there is just make sure you really understand what you're lending on, and that you have a good attorney writing good documents, and that you are vetting the investment so that you're not lending on something that is not going to return the money to you. But it can definitely be a great option to create cash on your cash, which is really great. Another way is to buy and sell notes on the back end. So somebody's already originated the loan and you're buying the loan on the back end and owning that. And then servicing it, where you don't even have to be the front end. You can just take a look at the deal and then buy the deal on the back end and own the loan or own the note on the back end of that and buy and sell those. And those are lendable too, which is nice. If you hold the paper, you can go out and get more loans on those and leverage your cash that way. And then the third one on the lending side is investing in businesses for equity and cash flow. We get approached a lot. I know Kimber does too. Somebody has got a business that needs money, or they're starting something up and they have a track record of success in the past. One of the ways that you can provide value is to invest your time or to invest cash into a business in return for part of the cash flow. So that's something you can do too on the lending side.
That's right. And I think thinking about from a lending, sometimes we think about equity investments, right? Which means like we're an equity partner in the business. But when you're thinking about this side, sometimes like what the business might need is not the equity, or you might think about it even as a loan. Hey, part of this, maybe I'm going to take my investment and part of it's going to be equity and part of it's going to be a loan, which is different, right? Which Casey is saying, because that loan, the business is then going to service the debt, like that loan, as a part of its expenses, and that creates cash flow, which might be different, right? You might have as much upside as the business continues to build equity and build over time, but it creates cash flow around that piece. Frankly, I think you should be doing the same thing if you're making investments into your own business. If your business needs a cash infusion, if something's going on, that's a loan into your business that you're making. And you should establish what is the business's like obligation. That shouldn't be like interest free, like, right? What does the money and the cash you're putting in the business, how's the business going to repay that, even if it's paying that back a little bit at a time? So just thinking about how that cash that you have available might create more cash flow.
Totally. I love that. Well, and then on the equity plays, let's say you don't necessarily want all of the risk of owning the real estate yourself, but you have cash and you want it to make you money, or you want a return on it. There are REITs, which are real estate information trusts, or investment trusts, known as a REIT, or syndications, which is a group of properties that are packaged together where you can buy into an investment in them and you own part of the like fund that owns the real estate. But you're not necessarily like, if the tenant doesn't pay rent, they're not coming to you saying we need more money from you. The fund has to perform. And so minimizes some of your risk.
It does, right? So if you're like, you know what, I'm running a business, I don't have time to do all that stuff like that. I don't have that. That's great. Like a REIT might be something worth looking at, right?
Mhm.
It is that fund. Sometimes you've got guaranteed floors of interest returns, like all those pieces. And so those are things to think about. Same thing around syndications, right? Syndications that are going to be ways of like, hey, there's somebody else who's doing the groundwork, the legwork to identify the opportunity. And you're passive. You don't get to make decisions. You're a passive, you're along for the ride, and you're going to benefit from the cash flow that somebody else's good sound that you, right, who you're getting in business with matters in all of these cases, but that's the person and that's the fund, right, that you're going to be being a part of.
Then this is one of my favorite ones. That's if you are in a business right now and maybe there are additional businesses that you are sending clients to or that are business adjacent to yours. This is something Kimber and I both really love, which is there are ancillary businesses and partnerships that you can make that are already being fed by your current client base. So we're in real estate, for example, that could be lending, that could be title, that could be recruiting other people to your business or brokerage or referring people out as clients. And so you can also think about like referring partners, people that you send clients to that maybe you're not in a partnership with, but maybe they send $25 or $100 referral fees every time you do it. Well, one time it doesn't make a big difference, but you add that up over hundreds and thousands of clients, that becomes real big. And those can be from home warranty companies to movers to inspectors to insurance companies. And so think about like, what are the businesses that I'm already supporting? And is there a way for us to maybe have a relationship together? I will tell you, you do want to make sure you always disclose to your clients if you are in a financial relationship that you are receiving money from somebody else you're recommending. So that's just a pro tip.
Yes.
And probably a legal tip. I'm not an attorney, not giving you legal advice here, but just please make sure you're always full disclosure if you're receiving a compensation benefit because you're recommending somebody who probably is already really good, but just make sure your clients know that. It's a good pro tip right there.
Yes. Consult an attorney for that, right?
Yes.
Those are legal documents,
Yes.
all those pieces. But I think this is a big one because you want to really look at where your business, like whose businesses did your business support, right? And what are those relationships? What are those partnerships? And, I think these are places that you'd be using anyway, right? You already endorse them. These are relationships that you
they're
really
already
get
good.
behind.
Yeah.
They're already great. Yeah. Like you're invested in them. So what are those things? And are there opportunities to really continue to deepen those? So I think that's a big one.
Yeah.
I love this too, like your referring partners. We mentioned this too in yours, right? But like think about the people. I would add even your tech, like what are the tech people? What are the places? Any of these folks that, we were talking about Disney Plus, but like what are the things that also create reoccurring subscription revenue, right? Can you participate in that if that's something that they're going to continue to provide that service and support to? Being able to just provide the value, give the client the information, but also have that be additional potential cash flow opportunities.
Love that. That's awesome. Then another one is royalties. And royalties can look like intellectual property. I think about Wendy Papasan's husband, Jay Papasan, and his books he's written, right?
Books,
Those have
yeah.
intellectual property and royalties. One of our people that's really big in our community is a patent attorney, and he has people that will invest in patents with him when he goes and buys patents, and that creates recurring revenue because people pay for those. You have oil and gas royalties. In Texas, we have a lot of natural gas here. So there's all sorts of different ways. Royalties, which is you're getting paid a smaller amount, but on repeat for different things, whether it's knowledge or minerals or something that you've contributed to society that you can get paid on repeat for with that. So something for you to consider.
Just expanding the way.
I know.
And I love this one. I thought was fun, especially for those of us with like kids. And I know we hear, people talk about this as often a first business, these standalone assets, like a vending machine. I love this ATM, right? Where you're somewhere where it's like, we only take cash. And then they're like, but don't worry, we have an ATM in the corner. And what happens when you walk in the corner? They're like, and it's a $25. Like,
Yeah, you're like,
to be able to do that. You're like, wait a minute. But I think these things that are, like you look at the things that are kind of standalone, but that also generate cash, right? Like there's the initial upfront investment in them, but then they are continuing to potentially throw off cash. And some of these are big things as we talk about, but some of these are small places, right? That you're able to create different streams of cash flow in your life to fund that big life.
one of our family friends in Denver is a dentist. And do you know what he did for his marketing? In all of the like shopping areas, he put gumball machines with his name and number on them that said, "Call me when your crown pops off." And literally, he was like, someone's going to sell it anyways. So he literally owns all the gumball machines in town.
It's a great like double marketing.
Yeah, it has this dental stuff all over it. So it's like, you're going to do it anyways. But when you do, you can call me and I'll fix it for you. Isn't that
Exactly.
crazy?
Call me and I'll get you out of this jam.
I bet he buys the extra sticky gum. What do you bet?
Oh, yeah. Yeah.
And then a last one. And this one is one that's been around forever. It's probably one you think about most common when you think about creating passive income, but it is investing in funds, investing in larger institutions for more passive plays. And so, like, I know when we were moving my parents from the like active income into the passive income side, looking at like bonds, looking at treasury bills, looking at municipal bonds, looking at like more conservative things that are backed by large standing financial institutions that have a predictable quarterly income that spits out, and it's almost like contractual. Like if you buy a 5-year treasury bill, you're in it for 5 years. If you buy a municipal bond that's a 3-year municipal bond, it's where a city might go and do an infrastructure thing where they're like, I'm going to go build all these roads and we need to get money to do that. That's what those municipal bonds are for. And then the city pays it back. So those sorts of things have been around forever. It's a lower interest rate, but it's very steady, stable. And oftentimes there's tax benefits. I'm not a CPA, so talk to your CPA, but there's tax benefits of it too when you look at some of those things. So those are very steady, stable, and probably fit more in our 4% rule than in some of the other greater cash flow. But if you're diversifying, it might not be bad to have some of those in there too.
That's right. I love that. And as you're thinking about your investment accounts, like we're not saying abandon the things that are in the 4% rule, but we're just saying, hey, there's some opportunities to diversify so that you can get there faster. What we want is not for you to delay that big, powerful, beautiful life that you're building it right now. And I think the key for both of us has been tracking it. Like you can gamify this pretty quickly, right? Where you can look at, hey, all right, this is how much, I didn't even realize, right? How much cash flow I had coming in, how much passive cash flow. So that was not tied to my everyday work and income, but I'm tracking it and then set a goal. That's really powerful, right? Like what's your goal to move the needle this year in your cash flow? And then it's going to literally activate your brain in a way to be able to look for those opportunities to get more intentional, to be more purposeful about it, and to get faster to that freedom number.
I love that one. Ask people about it too. Like that's something that I realized I wasn't doing was just by asking people, what's the coolest thing you're doing for cash flow? Or like, what's the smartest cash flow decision you've made in the last 12 to 24 months that maybe most people wouldn't think about? You would be amazed how many brilliant people are in your community and in your circle that are doing really cool things and they just don't think to talk about it. And so that was, Kimber and I both started having those conversations. And it was like, oh my gosh, that is really cool. I didn't know I could do that. So ask those questions because you'll never know if you don't ask.
That's right.
And that's one of my favorite questions I've been asking for a year now, and it's helped us almost double our income. So how fun is that?
And then it gets real good. That's right.
Yeah, so fun. Well, you guys, thank you for joining us. I do feel like I need to disclose Kimber and I are not financial advisors, attorneys, or CPAs. So we just want to make sure you know these are great ideas for you to go out and research, explore, think about, make sure you're always consulting with great advisors because when you go out there and build that big business, you need really good advisors too because you need to live that beautiful life. So go out there, build that big business, even beautiful life, and let's all make sure that all of you are getting that freedom number faster. So go do it. Thanks for joining us today, guys.
Have a great week.
Bye.
Bye.
This podcast is for general informational purposes only. The views, thoughts, and opinions of the guest represent those of the guest and not Keller Williams Realty LLC and its affiliates, and should not be construed as financial, economic, legal, tax, or other advice. This podcast is provided without any warranty or guarantee of its accuracy, completeness, timeliness, or results from using the information.